Hello, my name is Faina, and I have dedicated the last 7 years to honing my craft and fine tuning my strategy.
Hi, I'm Louise Nonweiler and I'm a trading psychology expert. I've worked with traders for almost a decade across the globe. I am a multi-award-winning clinical hypnotherapist and life coach. I am also the founder and creator of a proven online psychology program.
At Trading in the Zen, we believe that there is much more to trading than numbers and probabilities. Like an athlete, a trader should operate in their peak state. Each week, you will have mind-blowing interviews as well as actionable tips and strategies that you can implement in your daily life to become a better trader. Thanks for spending time with us today. Now, let's dive right in.
Hello and welcome to another episode of Trading in the Zen. Today we have a very inspiring guest. His name is Erik. He lives in the US and he's a self-made millionaire. He's made his fortune from trading and investing over the years, and he's also a Marine Corp. I think you're going to find this conversation very inspiring and insightful. I hope you enjoy. So hello, Erik. It's really a pleasure to have you and an honor on the show today. And so let's dive in. I mean, can you share more about your background? Because, what inspired you to venture into trading and real estate, coming from sort of being a Marine veteran?
Yeah, for sure. So I was actually one of those weird cases where I started trading early, even before I joined the military, even before I went to college. I started trading when I was in high school. And what got me interested in that, like a lot of Americans, I grew up poor. I had a single mom, and I was just trying to figure out how to change my paradigm, right? I didn't know what I was doing. And I was working a lot of odd jobs. So I started really young. I started working essentially when I was like a preteen, like 12 or 13. And I started with like splitting wood, moving shale, stuff like that, selling Christmas trees. So I was saving all this money. And I had a high school teacher that asked me, like, what are you doing with this money? Because he knew my family and he knew my older brother and he knew that we didn't have a lot. So he was just asking what I was doing. And I was like, oh, I'm just saving. Like, I don't know what else to do. And he's like, well, you should look into investing. And literally that's how I got started investing. It was back in 2007. I was still in high school at the time. And I was like, okay, if this guy says I should do this, I should at least look at it. And that's really what set me down that path.
Okay, fantastic. I mean, so did you sort of self-educate, or how did you kind of educate yourself along the way since 2007?
Yeah, it's pretty much all self-education. It started with reading stuff. I know if you have any younger listeners, this is probably going to sound weird, but I went to a place called a library that has books. And I opened a book. I'm just kidding. But that is it. Like, I did start by reading books, and it didn't seem native to me, but it didn't seem foreign. It kind of made sense, the kind of stuff I was reading. So then I wanted to understand how I could accelerate my rate of return, which naively enough, looking back, that's one of the worst things you could do as a new trader. But like most new traders and young men, I was about as patient as you imagine that combination would lead. So I just wanted a bunch of money right now. And I was trying to figure out different ways to do it. I found options so I could gain leverage. And then I started going down trading derivatives. And that's still what I trade today. But it definitely has been first formal kind of book reading. Then I started coming across internet resources. And then, funny enough, I came across a mentor in a Facebook group. He was an army dude that I've never met before that point. He's just an online guy. And I saw him answering people's questions, and he was super snarky. And I loved it because he wasn't trying to win anybody over. And I was just like, this is the guy that I want to talk to. So I started just querying him, and he would give me 1-word answers, 2-word answers. He wouldn't essentially talk to me because I was asking dumb questions and he didn't want to be bothered with kind of like those stupid questions. And from there, I kind of kept bothering him, and it started, budding into a more mentorship style relationship that ended up leading me down probably the only trajectory I could have thought that led to success. Because for my first 5 years of trading, I wasn't doing bad, but I wasn't doing great. And if I had kept that same pace, I probably would have gone nowhere pretty quick. But overall, self-educated, yeah.
Okay, fantastic.
So I'm a trader myself, and I trade futures, and I know that having the right mentor means so much, because people overpromise and underdeliver, and people make it look so easy, and it isn't that easy, in my opinion. It takes work, it takes dedication, it's a profession, and I think there's like a lack of respect for what we do, and a lot of times, because like all the people are making it, standing in front of someone else's Ferrari and making it look so cool. But I think in trading, a lot of it comes down to discipline. And you being a Marine, do you think that helped you with your trading, because you have the innate ability to follow through, stay disciplined, and stay focused?
It definitely enhances the process. So the guy that got me into investing back in high school, he was a junior ROTC instructor for me. So it's kind of like it's like a small military program in school. You can kind of think of it that way if you guys don't have that overseas. And he was interesting because he would tell me that even in high school that I had discipline that he hadn't seen in like some of his military cohort people, which always, and that still baffles me today, to be honest. I was actually just talking with this same guy. He's kind of like I call him my stepdad now. He doesn't have any relationship to my mom like that, but he's filled like a father role in my life. And so I've asked him that a bunch of times because I haven't quite figured out where it comes from. I really don't know. But ever since I was a kid, like I was one of those kids where I got homework in school. I wanted to get through as much homework as I possibly could while I was in school so that I could go home, finish what little bit of homework I had left, and then go play basketball. My mom didn't have to tell me to do any of that. My mom didn't have to force me to sit down and do my homework. Whereas my brother, if you didn't tie him to a chair, he wasn't doing anything. So I never understood the difference. But the entire world of discipline, I don't even think it's relegated to just trading. Like if you do not have discipline in your life, you are going to see it. You're going to see people who are miserable, who can't accomplish things because everything else is to blame. You learn that you're a victim. And without some level of control of our subconscious mind, you just essentially are going on autopilot. Like, yeah, you want that, giant quadruple 64-ounce soda because your subconscious mind wants all that sugar. It's immediate gratification, but then you are completely forsaking the delayed result of that immediate gratification. So I think discipline is a requirement in life, but in trading, if you're not disciplined, you're not going to be here very long. Or if you're going to be here long enough, you're just going to lose boatloads of money. One of those two.
Yeah. So in my opinion, not only is it discipline, but also you have to have something at stake. I think where people keep doing the same thing and making the same mistakes, the wager is not big enough, right? What's on the other side of it? What are you wagering? Because if it's, your health or something really, for traders, they go and say, I will not do this today. And then they go and they make the same thing, same mistake over and over and over again, because I think not enough is at stake. If I told you that you're going to lose your whole account in one shot, or for example, because a lot of us are working from home, right? So there's no one, but if you work for a company and they give you a set of rules, and the minute you violate that rule, you're fired. Now you have something at stake. So I think people need to have like a bigger wager to continue, I guess, to stick to what they promised themselves they would do. I think in terms of you, what is your why? Because you're really successful. What is your why? What's at stake for you?
It's funny. So the why in the beginning was to position myself young enough to take care of my mom. So like I pay for her expenses now. And that was like my first threshold. That was what I knew I needed to do because she didn't have a retirement. She was a contractor her whole life. So like making sure that she would be at a point where she could retire, at least at a reasonable point in her time. She sacrificed essentially her, first 40 years on earth for my brother and I at a minimum. So I felt like I needed to be in a spot to take care of her. So that was the first why. And then I actually went through a little bit of a super high class existential problem because I'd gotten to a point financially where I was very comfortable. And then I was starting thinking like, what's the point? Like, now what? Now why? And I actually kind of lost myself for a little bit because I didn't know the answer to that. Because for so long, my why was to make a bunch of money. That was the why, have a bunch of money. And I thought that somehow the rest would just figure itself out. And then you start to realize, like, you get to a point where you have, sounds weird, but like you have enough money that you're satisfied with your money. And then you have to start thinking about other things that start to motivate you. And I will be honest, like, part of it is greed. Like, I want more. I continue to want more. And a big reason why I want more is because now I can spend time making YouTube videos for people and paying an editor so that they look okay. That's because I have more. I have more than I need, that I can essentially throw money away like that. Because like I told you before we started recording, like, I don't have a course I sell anybody. Like, I'm not making a bunch of money by doing this stuff. So the only way you can get to that point is where you have enough excess that I can rationally throw, quote unquote, some of it away for what I consider to be kind of greater community good. So I think the guiding force I have now is twofold. First is self-actualization. I consider myself a perpetual learner, and I really am interested to see what I can do. And I don't know the limit yet. And my goal is to find that. And the second thing is, I've done this my whole life, but I consider myself kind of, I don't like the term that much, but a lot of people know what it means. It's kind of like the sheepdog. There's like this saying, right? There's like the wolves of the world, the sheep, where there's just a lot of people doing their thing. And then there's the sheepdog, who are kind of not too different from the wolf, but we have a slightly different motive, and we're willing to confront the wolf. And in the finance space, I find no shortage of wolves. Just as you said before, there's no shortage of people who will go lease a Ferrari for an afternoon, go sit in a jet that's on the ground, to tell people, if you learn these two, the secret to the universe will fall into your lap, you'll make buckets of money. The part that really bothers me about that is that they're attacking the most vulnerable people out there. It's people without a lot of money, who need a lot of money or want a lot of money quickly, and they're ignorant. They don't know what they don't know. So they think this could be the case, right? So I hate those people. And that's a big part of why, is to kind of continue being the sheepdog in a different environment.
Yeah. Thank you for sharing that. I'm really intrigued because obviously you've had discipline from a very young age, Erik, and you're self-educated, you've had drivers. What kind of things do you do to work on your conscious mind and your subconscious mind, if you do, to kind of keep yourself motivated and driven and focused?
A couple of things. So specifically, I spend a lot of time considering subconscious function, because I think for a lot of people, myself included, for a long time, my subconscious mind, and most people's subconscious minds, it's kind of this autopilot. I read a really great book called Atomic Habits. I think it's by James, or I can't remember this dude's name, Atomic Habits. That's whole right. Bit.
Yeah. So
I read the book.
Yeah, I'm going to get it actually.
Cool. So for the subconscious mind, I think a lot of people don't understand, myself included, just how much processing happens behind your external processing. So our minds, at least from my understanding from reading that book and other studies, it wants nothing more than to offload decisions. It wants to maintain as much excess bandwidth, because we live still in a fairly primal state where we want to be able to react and decide very quickly if, a predator leaps out in front of us. Anyways, that all means that there's a lot of subconscious processing that's going on. So a lot of times throughout the day, I do a lot of things, and they're kind of weird. But one of them is, if I have an urge to take a sip of my drink and I feel that urge, I won't accept that urge. I'll say, okay, I'll take a sip in 2 minutes. And it's me acknowledging this subconscious wiring that makes me want to take a sip of something, but I'm just not going to do it on autopilot. I'm going to make a conscious decision and make sure that I'm still thinking through that. I also think through a lot of kind of scoping. So one of the things I think traders get into the rut of is where they just have this insane fear of risk. And they think, if I lose my money, I'm done for. And that's one of the really great benefits about being in the military, especially the Marine Corps, is my kind of risk profile is different. Like, I always think of it as, if I have a bad trading year, I've not lost limb, I've not lost eyesight, I've not lost life. So it might sound, well, obviously, but that is the case. So I can always make more money. I don't care. Like, I can make more money. But I make sure that my subconscious brain is very aware of that, so that over time, I've really developed an overall callousness and detachment from trading capital. The way that I've also set up kind of the feeding mechanism is that it's not spoon to mouth. So I could not trade for 5 years and still maintain my current lifestyle with no impact for 5 years. And that's by design. So that if I have a bad day, a bad week, a bad month, I always think of it as, this will come out in the wash. It'll be okay. So that I really decrease a lot of that necessity. So I think most of the effort I do is really addressing the subconscious mind. The conscious mind, I suppose I regulate well on a day-to-day basis as is, or I do my best, but it's really the subconscious mind that I spend a lot of time on, because that dude can be pretty nefarious and he drives the ship more than I would like him to.
Yeah, it makes sense, because as traders, you have an impulse, right? And you need to kind of stop for a second, especially if you had a loss. The impulse, we want to go and make it back. We want to, because we tie a lot of self-worth and all of our dreams to one trade. And I always think about that. It's just one trade. It's not that big a deal. And people would lose their whole account over one bad trade, because they just get into this thing, like they watch their dreams slipping away and they want to so desperately grab onto it, and they say whatever you resist persists, and it just becomes like a snowball effect. And I like your suggestion of, you have an impulse, give it a second, and then decide if that impulse is correct or incorrect, and then you're in a driver's seat, and then you're not just being reactive, you're being actually responsive. But what about, and also the second thing you said about having enough capital to live on, because you don't need it. When you don't come from a place of need, you're not going to push anything, and you're not going to take your losses so hard. But what about those people whose whole lives are on the line, and it does matter, and it is like, they take a hit, it's felt, and they have children and families. And how does one, what would you say, how does one come back from a string of losses? How do you bounce back?
I think if that person is like using that example, in my opinion, they've already messed up. Like, honestly, like if you have family, if you have people that are depending on you, and you're essentially the primary breadwinner, and if you have a bad trading week, now your family is going to feel that the following week, you've already messed up. Like, you've not planned well. Because think about how naive that is, to think that you could be so on every single day and not have any periods, even months, where it might not work out the way that you want it to. So the very first thing, I always think it comes back to, this is from Stephen Covey's 7 Habits of Highly Successful People. I read this back in college, but one of my favorite lines from that is, begin with the end in mind. So if the end in this scenario is the person to be able to trade and provide for their family, I think you have to create a supporting plan for that. And if your supporting plan includes, I need to perform essentially at peak every day or every week into perpetuity, that doesn't sound like a super solid plan to me. What if you're sick? Like, there's so many things that can come up in terms of contingencies there. So in that scenario, I would imagine that person would need to plan better. Maybe instead of getting to the point where they're trading now to support their family on a monthly basis, maybe they keep their job for another year or two, pad their account, build up enough savings so that you can then port over to trading, and you've created a buffer. Or another thing I think works well is diversifying where your money is. If one of the things, I go back and forth, and if I couldn't make the money that I do in trading, I wouldn't do it. I love trading. I'm fascinated by markets, but I never let my interest in a hobby overwhelm the purpose. The purpose is to make money. And I tell people this all the time. If there ever comes a time where I'm not effectively making money trading, I'm going to move to something else. I'm going to move everything to something else. Because it's a business decision. This isn't emotional, oh, but I love this. Oh, I spent 16 years trading. How could I leave it? None of that matters. What matters is I'm doing what I'm supposed to be doing, which is making money. So I think keeping first things first, also from that book, is super important. And for that trader, I think go back, work a regular job for a while, continue to trade to hone your skill set, build your savings so that you're in a better place to better execute your plan and support your family. Because if you're going spoon to mouth, you are literally in a survival scenario on a daily basis. I cannot think of many super great decisions, especially higher level thought patterns that are going to come from that kind of circumstance.
Yeah, that's a good point. Now, one of the things that's really stuck with me over time is I've read a lot of books as well. One of the things that Warren Buffett said, I think it was him, he said, if you're not making money whilst you're sleeping, you're always going to be working. Now, that scared me when I read that. And I was like, that really kind of resonated with me. And I was like, even before then I was investing. But I mean, my question is the power of compounding, the power of investing. Let's talk about that, because obviously you've got a huge amount of knowledge and I can see on your face you're passionate about it as well. But let's talk about how important do you feel it is for everybody to get into investing, whether it's $1 or $1,000?
As you could tell, as you were asking that question, I smiled. And the reason why I smiled is because the concept of compounding interest is what changed my life. And because of that, I have a website, and it is, I literally, I'm just finishing building this, and it's for free for everybody. I literally paid somebody to build this because I'm not that smart. But I purposefully built a compounding calculator, and I'll share it with you here. So, I don't think I can share my screen.
You can. Okay. Yeah, you can. Won't be a moment. Let me just give you access.
Yeah, because there's kind of a specific example that I would love to show you, or I could just talk through it, either or.
Yeah, you should be able to share actually now.
Visuals are good. Yeah.
Yeah, let me see.
Visuals are good. It'll be easier to explain.
There we go. So I'm sharing, so the tool is still, it's not really in beta, it's kind of in alpha, it's pretty close to done. But anyways, this is from my website, and here's the thing that I try to show people. And I actually built a sneaky thing into this tool to force them to look at something whether they want to or not. So let's say you start with your $5,000 account. Let's say you're not planning on adding money. Let's say that you give yourself 30 years. Let's say you're a good trader and you can return 12% per year, something like that. Who knows? And let's see where that gets you in 30 years. So 30 years, $5,000, adding no money at 12%, which is essentially slightly outpacing the market, depending on what time frame, reference period for the market you look at, you'll have $150,000. Not much to write home about for 30 years of work. So what's the first takeaway here? Well, the first takeaway is the probability that somebody is going to trade a very small amount of money into a giant sum of money is insanely low. It's super low. So that's the first thing I thought of when I came across a compound calculator. I was like, because I think I started with like $3,000 or $2,500. I was like, okay, how much can I make per month on this? And And then I realized like, I can't do much with that. So then what I automatically force people to look at, I built it into the tool, is saving. If you saved $100 per month over this reference period, everything else remaining the same, $100 a month, and investing it alongside your other capital, instead of $150,000, you would have $440,000, $100 a month. So the point that I'm forcing people to consider is the importance of saving. So what I realized early on, going all the way back to the question on compounding interest, is that you need to feed it. It has to be fed. And if you're smart about the way you feed compounding interest, this starts to become super interesting. Because what I then said is, okay, well, if I'm starting with $5,000 and really I wanted to be a millionaire before I was 30, that was my target. So I had a much smaller time frame to work with when I, started essentially as a late teenager. So let's just move this down now to 20 years. I knew that I would have to have a better rate of return. So I looked at 15%, and based on I looked at literally every year in the market from inception out until the current point in time, which again was 2007, to see what was possible. So from there, I said, okay, if I need that to happen, how much do I need to save while maintaining this reference rate in order to get to my target? And that's what I started working off of. So then I said, okay, if I can save $500 a month, does that get me there? Pretty damn close. Now, maybe if I can get this to $750 a month, does that get me there? Boom. All of a sudden, we now start getting to magical numbers. So the whole point here is I just reverse engineered using compounding interest to figure this out. And I came across two things. The first thing was, because my approach to creating wealth really was going to be predicated on a need. I knew I needed to get to a certain spot financially to take care of my family. So I knew that I couldn't be out there wheeling and dealing, shooting and gunning and hoping that I have great years. I needed something pretty consistent. So I never really focused on having these giant years. I focused on creating consistency in returns that I could then lever and amplify my return profile over time as my skill set grew. So this entire thought process was born literally out of playing with the investor.gov. That's what started me. Compound interest calculator. That's the first one I looked at. And then now I have essentially an entire model built out in Excel that shows me, what my current pace is against target pace, what I need per week, per month, per year, and then what that grows out into. Because what you'll start to realize is as you have more money, one, you can scoot that interest return down quite a bit in order to still make a lot of money. And the other thing it really led me with is how important the details are. I actually just wrote about this not too long ago, because I think when we talk about consistency in returns, people just kind of think about, well, maybe I'll have a great year, the next year will be okay, the year after that might be great. And there are a couple ways you can greatly outperform the market. From the reference period 2007 until the last full completed year, my compound annual growth rate is around 24%. And it's essentially double the market. It's not like this astronomical return. Like if you look at the US Investing Championship returns, there's guys that are 100% plus. Like they're absolutely crushing it. But if you look at the compounding rate of that, there's a couple things that should come to mind. The first one is consistency in returns for modest outperformance can compound quickly if you give it time. The second thing is by avoiding drawdowns is so important in order to maintain your growth rate. Having drawdowns is such a massive factor on your ability to compound. And funny enough, as you could tell, I'm kind of passionate about that as well. I built another I was actually not planning on going into the website this much, but I literally, I built another tool into the website to elucidate this exact point.
So my question is, in regards to that, how does a person avoid drawdown? Obviously, there's the watch list, there's doing your research, there's being on top of the markets and the fundamental news. But realistically, how does I don't want to say average person, but how does a person who doesn't have much experience in investing eliminate or kind of reduce drawdown?
Yeah, that's a fascinating question. And there's a couple answers to it that I think are uncomfortable for people, but most of this conversation is uncomfortable for people because the whole idea of what I talk about, right? There's a reason why I say be an outlier. In order to succeed in trading, you cannot do what most people do. You cannot think how most people think, because we know definitively the breadth of research shows the average trader does not succeed. So that tells you something right out of the gate. You cannot do what average people do. So to your point, I think in order to avoid drawdowns, there are a lot of different ways you can do that. The first one is you can sacrifice upside to reduce variance. That's actually what I show in this example. If you look at portfolio one, we see that it has a 10% return. This is per year for anybody that's just listening. Portfolio one has a 10% return in year one, 10% year two, yada, yada, yada. Portfolio three has a 30% return, negative 25% return, 12% return, 14% return, 12% return. What I'm showing is that the average return in portfolio three is 8.6%, much higher, 1.2% higher than what it is in portfolio one. However, portfolio one made more money. How? How is this possible? It's because they didn't have a 25% drawdown. If you look at portfolio three, all of the positive years greatly outperformed the best positive year from portfolio one. It doesn't matter. So the first thing I would kind of encourage people to look at is consistency in their returns. In order to do that, you have to learn how to take losses. One of the biggest issues traders have in general, and this is super well documented as well. The thing that I try to tell people is like, you should never take my word for anything. Like, I'm just a dude. Everything that I try to direct people to is research. And you can look up a study called the Behavior of Individual Investors. It's by the University of California. And it talks about one of kind of the worst traits traders have, which is called the disposition effect. The disposition effect is where a trader will have a winning trade that they take off too fast, and they'll have a losing trade that they let go. And this is all driven by deep psychological functions. And it comes down to really ego avoidance. You don't want to realize the loss because that hurts the ego. And you want to realize the gain because it feeds the ego. It feels great. Who doesn't want a winning trade? Boom. Now we have a negatively expectant strategy. So all of this goes back into really analyzing how you behave as a human being. And if you have a trader that doesn't have a lot of experience, depending on the tenure of a trader, what I try to tell people to do, if I were giving myself advice, the entire first year going back, I would buy and hold in the S&P 500 index ETF, dollar cost average every single month with as much as I could possibly save, and paper trade. It's a super not sexy answer. Everybody hates paper trading. It's low, it's boring, it's slow. Nobody likes it. But guess what? I think that's where the work is done. Because for the people that expect to walk into the quote unquote field of trading and just somehow do well, like think of how egotistical that is. There's billions of dollars of giant institutions out here. There are people that have been doing this for decades that you are directly competing with.
Yeah.
And the thought that you're just the next great thing and can just walk in and do it, it's insane. What I try to akin it to for people is, if you wanted to become a professional athlete or if you wanted to climb Mount Everest, what do you have to do? Do you just start doing it and kind of see if it happens? No, man, you have to see what those people are doing, understand what works, and then spend thousands of hours figuring out how to do it for yourself. So the idea for new traders, I actually think avoiding drawdowns is one of the simplest goals you can set up front, and it all comes down to setting up circuit breakers. If you don't have loss management in place for every single individual position and then the portfolio as a whole, that's how you do it right out of the gate. It's not fun. You're going to realize losing trades, but you have to accept that early on. Because again, if you go all the way back to the compounding example conversation, you're not going to trade your little bit of money into a ton of money. So what you're doing early on is you're trying to understand a skill set, you're trying to save, and then you can start trying to outperform the market and grow aggressively.
Yeah, to your point, a lot of, they say hope dies last, right? And that is the issue with a lot of people, because they're sitting there and then instead of cutting their losses and do what has to be done, there's hoping. And in my opinion, as a trader, the minute you start hoping and praying, you definitely should close up, because this is not the game we're playing, right? The minute you're sweating, your palms are sweating, your jaw is clenched, you're hoping and praying, it's not going to work. And there's a good book, The Best Loser Wins. You have to learn how to lose. And you also, I love the book. It's like my Bible. And also you have to learn how to be nimble and switch your bias, because you have to read the market, because we come in with already a predisposed notion and we're trying to push the narrative. Well, guess what? Your tiny little account is not going to make a bank move. It's just not. Another bank can make a bank move, but you're not. That's just not it. And also what a loss is, people don't realize, is a bunch of people not agreeing with you. That's all it is. It's just a bunch of people did not agree. It's not a life-changing event. Just some people didn't agree with you. Let it go. Find something people agree with, right? And so I think that is part of the whole thing, is the ability to lose, because it's counterintuitive. In life, we were taught to win, right? Win, be the best at everything. And we carry that into trading, and we want to be right because our self-worth is now attached to being right. Instead of being nimble and saying, well, I'm wrong. Okay. All right. Well, I'll change direction. So I think that part of that is like our human natureness is what's making it super difficult. And also people who come in, right, and they have $5,000 and they think they're gonna make $1 million, and if you don't even understand the point of margin trading, you have 2 losses, you cannot recover. You are unable to now recover because you're trading on margin. You don't have the money, period. And so all of these people who are showing up, put in $100, and $100, it's a sneeze. It's nothing. It's not going to happen. And I think people don't even understand what margin is, how it operates. And if they can't make $100 consistently, paper trading, you are not going to make $1,000 with real money, because then real emotions. If you're sweaty with paper trading, you're going to be hella sweaty with like real money on the line. And so I also think like your routine and your prep, you mentioned athletes. No athlete comes into the gauntlet, into whatever, it's discipline they're competing in, unprepared and not warmed up. No one just come in. You've never seen an athlete run in, put on their sneakers and get on the field and start swinging the racket, right? They warm up. What is your physical and mental warm up when your day starts?
That's an interesting question, because for me, it's pretty simple. Like the mornings, I'm still in the Marine Corps Reserve, so I spend time doing that in the morning. Unless I have earnings plays on that I put on the previous day, like there's not a whole lot I need to do in the market first thing in the morning. So I spend a lot of time watching markets because I'm interested in them, but the amount of time that I spend like clicking the button on a daily basis moving trades is pretty seldom. It's like really not that much. Most of my homework is done off market hours. So like when the market closed, that's when I go through all my data. I try to see what strategies are working, what the market's doing. So in the morning, I'm mostly just doing like normal stuff, like completely agnostic to the market. Whether the market's up, down, sideways doesn't matter to me. I'm going to go get it, drink a bunch of water. That's kind of the first thing I like to do. Go sit out in the sun for 15 minutes, get some vitamin D, like all that kind of stuff. I have like a cold plunge in a hot tub, so I'll go cycle through those, go get a workout in. And most of my morning is just kind of milling about doing that stuff. I literally spend so little time first thing in the morning thinking about markets. It's not even funny, because my game isn't day trading. The whole point that I started trading is for freedom. And to me, it seems completely counterintuitive where that freedom is born from sitting in front of a screen all market hours. That sounds like a job to me. It sounds exactly like a job. So what I try to do is spend more time creating systems that more of a trend following approach. So I could put on positions and they're going to work or not work, and they'll have their durations. But most of the stuff I'm trading is longer than a day. So any individual day is generally low impact in terms of markets. And even if I'm trading earnings, which I will be there at the market open for earnings. And for those, it's mostly just looking through what worked, what didn't work, and just getting ready for the next bout. Because for anybody that trades earnings specifically via options, it's a numbers game. I'm trading what's called variance risk premiums. It's structural alpha. I know it exists. It's been there for decades. It will continue to be there for decades. It just includes taking risk. So as long as I size appropriately, then the risk doesn't erase me, then I'll just go take more risk. So there's not a whole lot to be done in that scenario either. Like I said, the vast majority of my thoughtware is done in the evenings after the market's closed. I'll start reviewing what's been working, what hasn't. I kind of have a weekly and a monthly review. Those are bigger exercises for me. And that's when I really get into the weeds on what I'm doing. But yeah, typical warm up is just same thing most days. Get up, start getting some water. I am a faster, so I eat one meal a day. I just eat dinner. And other than that, it's get out to training and start training for most of the morning.
Yeah, so for me, I only trade, I trade futures, and I trade specifically S&P. And so for me, I know statistically, because I've done a lot of studying and a lot of back testing, which I suggest that everyone does, because don't put your real money on the line. Back test and see if your hypothesis is actually correct or incorrect. The market will tell you. But I know exactly the window of time where my trades are likely to hit, and I let the morning rush pass, and then I'm more of a little later in the day type of thing. But I think a lot of people, because they don't have a system in place, they're stuck to the screens because there is no system. And trading without a system is a problem, right? Because that's when you're sitting there all day long, but you don't even know statistically when your strategy works best, because not all strategies work at all hours of the day. They just don't. There's volume, there's other factors for any trader. So when people tell me, and the second thing that drives me insane, people trading on their phones, this is crazy. It is a crazy thing to do, in my opinion. When people are walking around and they're like, "Oh, I just bought," I'm like, "What can you see? It's all bunched up," and it's so close to gambling for me. People who are starting out, I highly recommend to put your phone down. That is not where that is. How much analysis can you do on a tiny little screen, with your little fingers? So, what advice would you give someone who is just starting out and they have these big dreams and they've listened to the guys who are sitting on their grounded planes that they rented for an hour? How long does it take? And like, what is the best piece of advice you can give and you've gotten regarding trading?
Well, succinctly, it's not easy. And trading is nefarious because the barrier to entry is so low. You just have to open a brokerage account. And then the idea that you're just going to get in there and start outperforming is not great. What I try to tell people is the 5-year threshold is a really key threshold. Again, this isn't my opinion. This is from kind of a litany of research from SSRN. And the 5-year threshold is where we really get to see if somebody is going to persist effectively as a trader or not. And in order to succeed in anything that we know is difficult, I think it's important to understand the landscape. So if you think that just kind of walking in, that there's money to be picked up around, you just have to remember the age-old sayings, right? Like, there's no easy money. It's not there. So as soon as you think something is easy, you probably don't actually even understand what's happening. So I think for people starting anything that's super technical like that, it's like if you practice jujitsu or if you surf or you do anything like this, people who are really good at it, they make it look effortless. And it's because they've done something for so long that it then has that appearance. And then the first time you go out and try to surf, you literally can't even sit on the board. Meanwhile, there's people just popping up surfing. I remember my first time surfing. Yeah. Like, literally, it took me a few minutes to be able to sit on the damn board, let alone surf. And it's the same thing with trading. So what I try to remind people when it comes to trading, a few things. The first one is the failure rate is astronomically high. On a positive side, kind of a gracious side, maybe 10%. On a more realistic side, it's somewhere around 3% of people persist in trading after 5 years. So the fact of the matter is, for most people, trading's not going to be your thing. It is what it is. So you have to either decide early on, is this something that I'm going to fully commit to trying to see if I can make it work for myself, understanding those probabilities? Or is this something where I might be better off being a graphic designer because I have that skill set, and then passively investing in an index ETF, still getting a decent return, but doing something that better aligns with you. The very first thing I think any trader needs to cross the bridge of is understanding the landscape and then deciding if they're ready to fully commit to it. Because I tell people, I throw this number out there all the time because I've done the math, and essentially, as of the end of last year, it's technically like 32,000 hours I've spent on this stuff. So how much time you got? Because it takes a minute.
Yeah. I think that's great advice. I want to go kind of slightly off track. I want to find out more about you on a personal note. For me, work-life balance is very important, and it's important to, I feel, nurture your mindset, look after your well-being, physical, mental, emotional, and spiritual even. What is your work-life balance like? Is it kind of like percentage-wise, or do you just is every day different for you?
I honestly just do what I feel like. I typically like working, so that's why I spend a lot of time creating content for people. But let's say today, and if I woke up and I just wasn't feeling like doing anything today, I would have respectfully emailed both of you and I would said, sorry, today, I'm not feeling it today. I have to shift. And it just is what it is. And then, I obviously try not to do that, right? I'm feeling up to it. But the whole idea is work-life balance for me. I think that exists when you hate your work and you need to separate it from your life. Yeah. But for me, it's all the same. If it's all the same, if I feel like looking at the markets, I'll look at the markets. If I don't feel like looking at the markets, I won't look at the markets. I was just in Iceland not too long ago. And there was a couple days that I wanted to check on the markets, and it's not like I was sitting there like a junkie, like I have to check. I was like, I wonder how things are going. And then I didn't look at it a bunch of the other days. Like I just kind of listened to my body and what I feel like doing. Because the other thing is, I have an understanding and a healthy respect for myself. I know myself well enough at this point to call bullshit on myself, where if I don't feel like doing something just because I'm being a baby, I won't allow that. Like I'll immediately call myself out for that. But if I'm feeling like run down, I'm not going to go slay myself in the gym because I'm just going to try to mentally ego my way through it. I'm going to recognize that my body is communicating to me and I can listen to it. So work-life balance for me, it really is one and the same. It's just life. Like I just live my life. I understand for some people that really dislike their work, they might have to do that, but not so much the case for me.
Amazing. Thank you. Thank you for sharing that.
Yeah, of course.
So I also want to talk, before we wrap up the show, I know that you enjoy traveling, martial arts, fitness, biohacking, scuba diving. So you've got all of these kind of passions and things that you do, astrophysics, philosophy. I mean, how do you, again, kind of not about the work-life balance, but how do you find the time? And do you just kind of say like, one day I'm going to go traveling, or I'm going to do martial arts or jiu-jitsu one day? How do you kind of just bring it into your life?
It's funny you say that. A couple things. It's one of the things that makes me a good trader is I'm obsessed with efficiency. So I don't have a lot of like slack. And the other thing I'm very good at is I tell people like, I'm not the smartest guy around. Like I'm average, like straight up by all accounts, but I am insanely consistent. Once I decide that I'm doing something, it's going to get done perpetually, whether I feel like it or not. I'm going to continue that skill set. So that's how really I continue all of those things. Like the stoicism, the philosophy side of things, I'm fascinated by the brain and the way that I think about the world. And I integrate what I consider elements of stoicism every single day. So one of my favorite stoic practices is kind of, it's a simulation. And it's one of the ways to get us to be more grateful for things that are as they are. So one of the things the Stoics talk about doing is, one, visualizing your own death. I do that every single day. I visualize my death in perfect detail. And the whole concept behind that is to get you, one, more comfortable with that concept, but two, to continually remind yourself, we know this, but I think a lot of people put it in the back of their brain that, oh, sure, we all die, but not today, not tomorrow, but it might be. It literally might be. So because of that, it kind of forces me to focus on each day. So literally when I wake up, I conceptualize my death, and it forces me to think about that day more carefully. Then another one of my favorite Stoic practices is whenever I take a shower, it's another weird one, but I close my eyes and I do the whole shower with my eyes closed. I pretend I have no sight. So another thing that Stoics do is they simulate loss of eyes, loss of speech, loss of hearing, loss of limb. And it's, again, just a practice to make you more thankful for things as they are. We spend so much time hoping things are different, wishing something was slightly different. I just had to pay somebody to come like redo my whole roof because it was leaking. That sucked. I wish that was different. It doesn't matter. Like none of it matters. Guess what? Like when I got out of that shower and I could open my eyes and I realized, damn, like this vision thing is pretty sick. I don't care about the roof anymore. Like it's whatever. So I look for ways to integrate all of these things into my daily life. Same thing in the morning, right? Like the biohacking. That's why I heat cycle, cold tub, hot tub. And that's why I've built a process. I call them systems, but I have a system for me to be able to do that with very little time investment so that it can happen every single day. And then another thing that I do is I have like a Kindle, and I started this during COVID. I never used to read books all the way through. I used to skim through them because in the Marine Corps, you read a lot of history, a lot of battles, but not a lot of like full books. So in COVID, I started telling myself I was going to read every single day. And so I started at night as a replacement for looking at my phone before bed. I now, as soon as I walk in the bedroom, the phone gets put up on the charger, make sure my alarm is set, the alarm in the house is set, phone goes up, and then I read. And in my little reading library, I have books on all these different things. So A Brief History of Space and Time. It's one of my favorite books. That's by Stephen Hawking. It's an astrophysics book, just kind of for lay people like me to understand the universe. So that's in there. I have, 7 Habits of Highly Successful People in there. I have books on trading in there. So then I literally just kind of pick up the flavor of the night. When I go through I call it my active reading list. And I permit myself no more than 10 books in there, because otherwise I do what everybody else does. I see this book, I want that book. I see this book, I want that book. I see this book, I want that book. And then none of them get read. So I force myself 10 at a time, and I'll just flip through them. And I will purposely keep a couple more boring books in there, because sometimes before bed, I get a little too ramped up as I'm reading something and it sounds pretty sad. But as I'm reading like statistics on market execution, I get a little too revved up. My mind is racing. I'm looking for inefficiency. So I was like, okay, I got to switch to something more boring. Let me switch to this, a little book on economics. And then that'll put me to bed in a couple pages, no problem. But I create time every single day for the things that I care about is really the long and short of it. What I tell people is, if you say you have no time, think of how sad that is. All you're telling me is you have no control over your life. If you have no time, you have no control over your life. There's plenty of time. It just comes down to prioritization and sacrifices. What do you want to spend your time on? Some people want to spend it on other things. That's okay. But acknowledge that you're making that choice. So for me, I make the time.
Yeah, I think a lot of people spend a lot of time. They don't even realize how much time they spend scrolling, like mindlessly scrolling. And if you add it all up, you realize you could have been reading. And for me, I try to read a book a week as much as I can. And sometimes I do 2, because I speak fluent Russian. So sometimes I'll have a book in Russian and a book in English, and I go back and forth, like depending on what language I want to stimulate my mind in. And so my Russian books are usually like more lighthearted and like some, classics. I'll read like the Gogols and Tolstoy's and Dostoevsky's. And so that is going to be like my fun reading. And then my English books in English, I usually, have to do with trading or on self-growth and all the other stuff. So I know like what I'm feeling. As soon as I switch the other way, I go to Russian, it's like a lullaby. It's over. And that's how, because once I start reading about trading, I just want to go back to the charts. I want to go look at things, going to figure stuff out. And as much as you, like, I probably trade maybe 10 minutes a day, maybe. But I spend a lot, hour upon hour analyzing, backtesting, thinking, reworking. So, trade, the whole thing of trading is glamorized, but really people think we sit here and just like in and out. I mean, some people scalp, but that's like modern day slavery. This is not what I signed up for, and I'm not going to be jumping in and out and sweating and all that other stuff. It just does not look fun. But it's interesting that, a lot of stuff you're saying, I'm smiling because I'm like, I also have my sleepy list and like my active list of reading. Yeah.
It's good to have a variety. Erik, we've actually come to the end of the show. I have to say, I find you fascinating. Like, I really do. I just, I'm sitting here and I'm like, I've got goosebumps. I'm inspired. I'm taking notes, and it's been a real pleasure to have you on Trading in the Zen, and we have to have you back in 2024, please. And if you'd like to be a guest, of course, and then we will share your information, like the calculator, if you're happy once it's up and running. But I mean, do you have any last words of kind of wisdom or anything?
And where can people find you, maybe?
Yeah.
Like if you want to give people like a way to contact you for whatever reason, or I'm not sure what it is that, you have to put yourself out there aside from building systems.
Yeah, for sure. So the way to get a hold of me is I'm on Twitter and YouTube at ES Invests. So you can check me out there. And then kind of the last thing that I would say to people is, if you do average, that means you're doing what everybody else is doing. And think about what that gets everybody else. It gets you 11 paid vacation days per year. It gets you $76,000 in average annual expenses, $92,000 in annual income. It doesn't look super appealing to me. So I really encourage people to take a look at your life, see how you feel about it. And if it's not exactly what you want, do something, because it's not just going to magic you to where you want to be. And in order to do that, you have to do what other people aren't willing to do. So just embrace it and get going.
Love that.
That's a great note to end on.
Yeah.
Thank you
absolutely.
for being with us, Erik. And I'm really inspired. I'm going to go read them. I'm just kidding. But it was such a pleasure to speak with you. And we do look forward to hopefully having more conversations. And to all of our listeners, well, this is the last podcast of 2023, and we'll see you all in 2024.
See you in 2024. Thanks, Erik. Thanks, listeners. Bye.
Thanks, you guys.
Bye. If you would like to be a guest on the show, then please contact us at info@tradinginthezen@gmail.com. If you're a trader who is struggling with their psychology, then please go to www.hypnosisfortraders.co.uk. There are various trading psychology packages and programs that will transform you as a trader. For one-to-one trading strategy mentoring sessions with Faina, please contact her below. Her details are in the description. Thank you.